According to Genghis Capital, tourism sector earnings, which recorded a 31.2% jump last year to hit 157 billion shillings, and diaspora remittance, which surged 39% to 274.2 billion in the 12th month to December last year, will continue to anchor a projected 6% growth in 2019.
Over the course of this year, we're looking at that stable macroeconomic environment still continuing to be the same. We expect inflation to remain within the target levels, although some uptrend to 7%.
While inflation reduced last month, the analysts say this will remain within government targets due to carry-over surplus stocks, long grains and regional cross-border staple food imports, while fuel inflation will continue easing. Nonetheless, with debt nearing 60% to GDP, this positive outlook could be weighed down if the government does not commit to fiscal consolidation objectives as a result of increased spending and unrealistic revenue targets that lead to 114 billion shilling shortfall in the first half of the 2018-2019 financial year.
The government has fallen behind in terms of its domestic borrowing, fulfilling that pot that they need of domestic borrowing, because you come and the price is too high. So people are offering 14%, you're prepared to pay 12.8%. So some bridge has to be found.
While the investment bank indicated that CBK will retain benchmark rate at 9% for most part of the year. Throughout the year, a review of the rate cap would ensure credit to SMEs.
Most of these, the corporates in these key sectors are large corporates, and those are the main beneficiaries of the private sector credit at the expense of some of the small SMEs. So that has been a concern for us, the low private sector credit growth.
The shilling is also expected to remain firm against the dollar with increase in forex inflows.